Saddle up for Wild West volatility as Bitcoin approaches the monthly close. Hey guys, it's Keith Allen. Man, what a 24 hours we have had here. We have got, I got something playing in my ear, so let me fix that for a second. And we're going to take a look at what's happening here on the Bitcoin chart. Last night, I shared a chart, I think it was about 10 p.m. Eastern time here in the U.S. after we had that liquidation event. I'm going to open on that, and then we're going to kind of zoom out and look around the order book and analyze the order book. But we got so much happening between now and the monthly close, and even beyond that, that I really think we're setting up for some good old-fashioned Wild West of crypto type volatility. So saddle up and get ready to ride. You don't want to get bucked off of this one. So going to do a deep Bitcoin analysis today, and we are going to start here. Actually, like I said, I want to start by showing you this chart that I shared last night. And we're going to look at a comparison between what happened last night after that dump and those longs got liquidated down to about 58, actually, a little further than I was even expecting. And then we'll look and see what we think might be coming next. So let's go ahead and start here. Posted this on the X platform last night, and let me just enlarge it here. So this is zoomed way in, right? Getting a high res view of the order book on the daily chart, FireCharts, and zoomed into a pretty high resolution so we can see all of the individual price levels here. And as you can see, right at the point that we had got that dump, right after the dump, we had a ladder of new bid liquidity come in, and it extended down to the 50K range. So I want to compare this. This was 10 p.m. last night. We're now 12 hours, literally 12 hours from when I posted this last night. And this is the situation. Now here is the monthly chart. We'll get to that high res view here in a second, but you can see here on the monthly chart already, and I'm even going to bump up the contrast. You can see this ladder came in, and then what happened to it? It disappeared. Some of it seems to have faded down lower, extending down even to the 40K range. Potentially some of it moved in higher. Let's zoom in now to the daily and compare what we had last night around 10 p.m., 10:30 to what we have now at 10:30 a.m. So let's get it exactly like we were. We're showing each price level. We have some guardrails, if you will, here up high at 65K, down low at 55K. But will those, are those going to hold for us? That is the question, right? So here we go. So at this point, you can see again, and it's hard to see because it was so slight, but you can see that this liquidity came into the range, right? And this morning, it disappeared. Did some of it conceivably turn into market orders? Well, possibly. Hard to know for sure. We do have an uptick in whale market orders here at that time, and the amount and the reason that I speculate on whether that indeed happened is because the amount that was here is not equal to the amount that was here. So maybe they market ordered some and they put the rest down here, laddered down low, or maybe they're just extended it a lot further. I'm going to zoom out wider and see if we can identify any difference in that. No, it looks like it's down to about 38, about that 38K level is where it extends down to. What you can see though is that we do have some our anchored support here at the 50K level. That's only about 40 million. Still, the upside has more density, but we have some good depth here. I think there's, actually last night, this ladder was about I think 275 million or so down to 50K. Like I said, a lot of that got pulled here this morning. So we're in a bit of a different dynamic. Now, I've often shared with you guys that liquidity dampens volatility, right? And we can see that here on the wider view on the monthly chart. You can see when we have concentrated liquidity, that tends to uh, act as friction and keeps price within a range. So you can see we have obviously some overhead resistance here at the 60K mark. That's been giving us a little bit of a problem here this morning. And we have really not a lot between here and 65K. 65K significant for a lot of reasons. We talked about those yesterday as well. And I will show you here on the candle chart for starters that we have a mid-cycle top from back in 2021, right? Right here. That, and look at this scenario: mid-cycle top, dump, recovery, distribution rally to a new all-time high. Not out of the question that we could see something like that play out here when it's all said and done. Obviously, we have to wait to see how things develop. But this 2021 mid-cycle top, I really am wondering if that's going to come into play here for our monthly close, which is happening on Saturday. At the moment, we came into yesterday with a nice doji hammer being developing. And as price goes lower, that candle takes a different dynamic shape. So it really depends on how we close. If we close down here near support, then we no longer have a doji hammer. If we close up here near resistance, then we have a doji hammer, and that would conceivably indicate that we have a trend reversal coming. What could change? What could possibly change? What could possibly go wrong? A lot of things between now and then. We have a heap of economic data coming, so you never know. Hey, Crackdown 148, thanks for joining us. He says he's got had a short from 65, then closed it at 64 because it seemed like price was holding well. Well, it didn't, and yesterday we talked about that, right? I don't know if you saw the stream yesterday, but we looked at those liquidations. They have since been cleared, but we have now more developing here on the Kingfisher chart. So yesterday we had liquidations. We had a cluster of longs, I should say, leveraged longs in this 59.2 range up to the low 60K range. And I had said that I felt like these were ripe for cleaning on both sides. And these did indeed get cleared. I'm a little surprised. Oh, actually, we had some come back in. That's why this is here, because it went down to 58. And I'm going to refresh this, see if it's changed at all since then. Now you can see the short side definitely stacking higher, right? So how does this all develop here in the coming days with the situation we have ahead of us? Monthly close coming on Saturday. We have lots of economic data happening between then and now, namely, we have some JOLTS data that just came in. What does that say? A little on the hot side of the JOLTS. We will have tomorrow, we will have ADP employment, we'll have initial jobless claims, non-farm productivity, et cetera. And then Friday, the following week, right? So TradFi market's going to be closed on Monday. And then we will get back into the swing of things. Those events often make for some volatility. And yes, as Invest Meows has just pointed out, another potential catalyst for volatility today is the NVIDIA earnings coming at 4 p.m. Eastern time today. TradFi definitely clinging on to those. So we'll see how things take shape. There's so many different catalysts that could really, throw the market in either direction. It's hard to know. So we have to look level by level. We have to look at these catalysts as they come through, but also keep our eye on the broader macro, which is that we are still above the trend line. We are still, we may be challenging it soon, but we're still above the trend line. If you subscribe to the post-halving narrative or the or the cycle, narrative, then those things are still intact and in play. But those are debatable, right? There's a lot of discussion going on right now, and I had an in-depth discussion with my favorite bear last night about this very topic. That hey, maybe we've topped, and I see arguments and charts on both sides of that argument. So we will have to see how that actually develops. So Invest Meow's coming in with another little tidbit about Meta saying that it's going to buy chips till 2025. Well, 2025 is not that far away. You'd think that might be baked in at this point. Nonetheless, these are the things that we're watching coming into the monthly close on Saturday, and the unemployment numbers on Friday, September 6th. And the reason that I have my eyes on unemployment is because this is probably at this stage one of the biggest markers that Fed watchers are watching relative to what we're going to see in a recession, potential recession, hard landing, soft landing, wherever you sit on that narrative. It also has equal arguments on both sides, and we've got to wait and see how these things develop. So market is going to be watching that very, very closely. I think, and I'm horrible at this, so I'm just going to throw out the disclaimer that I'm horrible at making these predictions, but because I'm not an economist, but I think at this stage, we're at the good news equals good news and bad news equals bad news phase, because the Fed has stated they do not welcome any significant increases in unemployment at this time. Well, we already know it's on an uptick. And so is it going to continue to climb? Probably to some degree. Is it going to spike? That's what they're trying to prevent. And that's why they've told us that we can anticipate rate cuts coming, a series of them coming starting in September through the end of the year and into 2025. So those things are getting baked into the market. But like I said, we have these catalysts that we need to be mindful of. And I think that these potential catalysts on the economic side, of course, everything that's going on in the geopolitical realm and the U.S. domestic political realm could also serve as catalyst. And this liquidation, these leveraged trades can also be a magnet for price action. So all of this could happen. And I said yesterday, we could clean the downside and then go clean the long side and still end up here in the middle before we get to the monthly close. So as we, as that resolves, like I said, we're looking to see what kind of close we get. To get a green close, we need to be above 64,600-ish. That gets us near this mid-cycle top at 64,895. And that may or may not get challenged come Sunday, but I'd sure like to see us closer to resistance than down to support. Now, on that support argument, we had talked a while ago about, when we got into all these winding up, all of these death crosses here. We had 4 of them in a very rapid succession, and guess what? Here comes number 5 right here between the 100 and 200-day moving averages. Not especially a bullish sign. But maybe the positive to that is that it will eventually lead to establishing a bottom if it hasn't done so already. Where would that bottom be? Well, bulls would like it to be right here at our local low, our lowest low so far, at 49.5. So we are setting up for a potential retest of that, and that is seen right illustrated here perfectly on this chart. Here it is. We dumped down just below that 50K range. Incidentally, there was sentiment for 50K back then. Not a ton, but there was some bids stacked there. A lot more came in as price approached. It got filled. It immediately got replenished, and a ladder went deeper. So since then, it's adjusted a little bit, and most recently, we can see it's been fortified once again and growing a little bit here at nearly $33 million, right at that 50K range. So that retest would be very interesting. I think it would be welcomed, perhaps even expected at this stage by some. And when I did that analysis on the moving averages a few weeks ago, one of the things that we determined was that bounces after these moving average, after these death crosses play out, I should say, bounces often come from double bottom support. So let me see if I can get this thing to expand for me the way I want it to. So that's something that we're watching for here, right? Okay. And I'm going to see if I can. Am I even on that chart? Let me find that chart. Here we go. I think I actually marked a bunch of these crosses. So let's go ahead and put those back in, and we can revisit where those death crosses bounced from. Because sure, they're a lagging indicator, and it takes time for things to develop. This is enough, however many that is. It's probably more than we need. So let's look at what happens here, right? Here's the low. Here's the double bounce. Let's go back to another one. Here's a bit of a double bounce, a recovery, and then another breakdown. Not really a double bounce on this side, but almost close enough. This was the COVID crash. I'm calling that a bit of an anomaly. But let's back up one more to 2019. We see things bottom out here. Here's another one back in 2018, double bounce and recovery. So I would love to see a double bounce come off of this local support at 49.5 or anywhere close to that. And that could conceivably position us for a nice move to the upside. So what happens if that breaks down? And what could lead us to believe that can break down? Well, we got to go back to this daily chart here that we had all of these levels marked, and see the difference again in liquidity. You see how it's moving. It's moving aggressively. So it's really difficult to really have a lot of confidence in new liquidity placement holding, because when we're seeing it move like this, you never know if it's going to spoof. So we've got to be mindful of that. But we have little blocks here, and I'm going to increase the contrast here a bit more to see if we can see some of the subtle movements here. Again, here's where liquidity was removed from, and that kind of opens the door to some of this downside. We have seen some replenishment here in this 60 to here's some at 61.5. Here's more at 63, some in this range coming in. This is not insurmountable, though. These are not heavy concentrations of liquidity here at this point. So back to that statement of liquidity dampens volatility, we have a bit here that could slow things down. We have thin liquidity here that could make it easy to shoot back up to this 64, 65K range. And of course, that looks to me like easy pickings, right? Boom. We could clean that in the next 10 minutes, to be honest with you. And it's at this point about 41 million in accumulated short liquidations across exchanges, right to that 64. Let's see, 64,500 level gets us at 41.6 million. So that's an easy clean. Yeah, we could conceivably go down here and go after this, but look at the volume difference on the bid side, on the long side versus the short side. Just in the near range, right? Like I said, we're at over 41 million up to this 64,500 level, and we don't even get to that if we go all the way down to the 39 level. So this, to me, if we get to 39, we might get there. At 40, we're not there. At 40, we're still at let's see, at 40K. Oh, excuse me, we're at 45. We're at 45 million. So yeah, if we go all the way down, yes, we get there. What I say we had up here about 40 million, 41 million. We'd have to go to, well, that 44 target, beyond that 44 target to get there, well beyond that 44 target to get there. So in terms of targets to the downside, yes, 44 is still very much on my radar if things should break down further, right? If we don't get that double bounce from our lower low, then I would be looking at that. And I would be looking at potentially a bounce from the 200 week moving average. There aren't a whole lot of occasions where price is broken down beyond that level until this most recent back in 2022. But I think this was maybe only the third or fourth time that's ever happened. So that's something to be mindful of. But I like this. The reason I like this level, and not that I really want to go there at this point, but the reason I like this level is because we spent a lot of time consolidating here, and at the moment, it still has some confluence with excuse me, the 40-45 level is here. Still has some confluence with the trend line. Now down here at the 25-30K level, this is interesting for a whole nother reason. Actually, a couple of reasons. Number one, this is really where the in hindsight, this bull run really took off from, right? Really took off from this level. In hindsight, I remember waiting for retest of this level here at just shy of 25K, and it didn't happen. I waited for this for too long, and so I was a little late getting out. But once we broke through this 200 week moving average, I was in the game. And so conceivably we could go back there. And what is interesting, if we flip on one of my favorite old indicators, we could see that we have some consolidation in this area here. Boom, right there. That's the POC point, right there in the sweet spot. What is that? That's at 28K. So this is certainly not off the table. But to me, if we break the trend line, it's over, and we're going to grind down to this, and then have to work our way up. So this begs the question: if that were to develop, not saying it's going to, but if that is to develop, that begs the question of whether this was. Well, let me say this: if we retest this at 49.5 and this doesn't hold, then that really begs the question of whether this was indeed the all-time high and the local and the top for the market and this cycle, or if this is going to develop as a mid-cycle top, similarly to what we saw back in 2021, right? This could play out. That could happen. We could get into here by next year, maybe the end of the quarter of the first quarter, or maybe second quarter next year. Totally viable. So you can't rule anything out. That's why this is the Wild West of crypto still, because these things can happen. It's not what a lot of people are expecting, but if you don't identify the possibilities, then you're not prepared for them. And that's what I want you to do here. Be prepared for the possibilities. Guys, I hope that gives you some insight into what I'm looking at in the near term. Again, I've got my eyes on the liquidations, and I've got my eyes on the liquidity in the order book. You can see stair stepping down right into this 58. So is it going to be a retest here at 58, or are we going to indeed push down further into this level, where at the moment there is some double stacked liquidity here in this range that gets us over 30 million, but is it going to be enough to hold? That's what we're watching as we head towards the monthly close. And of course, we'll have new catalysts coming daily. I think the market is really going to be in this range, holding in this range until we get some clarity on those September 6th unemployment numbers. One quick look at ETF flows yesterday. Looks like Kathy Wood's ARK-B dumped 102 million worth, and BlackRock was flat. Grayscale continues to do what Grayscale does best, and that is freaking bleed. The ETH side, I haven't even looked at it. I promise you it's going to be ugly. I'm just going to say it was ugly. and it was, almost flat. 3.4 million in outflows, anchored by 9.2 million in grayscale blood. So there you have it. This thing just really has not taken off, and I wonder if it's going to grind its way up eventually, or if it's just going to have a slow and painful, ugly life. Um, well, that's kind of akin to what ETH is doing, right? So we'll have to wait and see how things develop further. In the meantime, guys, if I see things developing throughout the day, I will do my best to chime in and post something and keep you guys updated. If you like the feed, if you like the live content, please do me a favor, smash all of the buttons, especially hit that subscribe button up there so that you don't miss any of these lives as they come. And please share these and help me spread the love, man. Share these with your network and help me grow the channel. I really really appreciate that. And again, good to see some concentrated bid liquidity in this 57, 58 to 59 range. If that doesn't hold, then my eyes are really on looking for that potential double bounce support test from our local low. Seeing this develop is a positive development. Seeing thin liquidity to the upside makes it an easy move back to 65K. And that obviously, that area has a lot of significance, a lot of importance, as I mentioned, because it is coincides with the mid-cycle top and a potential green monthly close. We've got just a few days to go, guys. Bear with me, saddle up for the ride, and don't get bucked off. Somebody is trying to take your Bitcoin. Don't let them do it. Have a great day, guys. And as always, trade safe, my friends.